Welcome to the Thursday edition of Tech Stocks Daily, where we cut to the chase and bring you the juiciest tidbits from the tech world, sizzling hotter than your favorite jalapeno dish. Today we're diving deep into Apple's gripping quarter and its courtroom cha-chas, Microsoft's phenomenal cloud-fueled earnings sending its stock to the moon, and AppLovin making waves amid legal chaos and investor jitters. Whether you're here for the financial fireworks, the legal nail-biters, or just some tech stock magic, get ready to be on the edge of your seat. Buckle up, it's going to be a whirlwind tech tale. All right, tech enthusiasts, let's dive into the Apple-shaped headlines making waves today. Apple, the tech giant always managing to find itself in the spotlight, had a rather busy week. First up, Apple announced its fiscal second quarter earnings, and let's just say, investors were eagerly biting their nails. The company reported a solid $95.36 billion in revenue. That's not just a bunch of loose change lying around, am I right? Their earnings per share came in above expectations at $1.65, marking the ninth straight quarter they've outperformed expectations. High fives all around at Apple HQ, no doubt. Despite the good numbers, their stock took a bit of a roller coaster after hours ride, dropping about 2% after earnings were announced. Investors' nerves are perhaps feeling the pressure due to a few bumps in the road. A significant focus point has been Apple's struggle with trade tariffs and its implications in China, where sales dipped more than 2% to $16 billion. With China being a crucial market and competition heating up from local brands, Apple's dance with China isn't exactly the cha-cha-cha at the moment. It's more of an awkward shimmy across a geopolitical minefield. Moreover, worries loom over the lucrative deal Apple has with Alphabet over their default search engine spot given antitrust concerns. It's like having your best buddy at risk of getting expelled. Not the best floor to build solid investor confidence, right? Now, speaking of legal dramas, Apple was also in court crosshairs this week, with U.S. Judge Yvonne Gonzalez-Rogers bringing out the metaphorical gavel. She found Apple in violation of a previous court injunction aimed at managing its App Store pitfalls. Apparently, a 27% commission on some web-based purchases made through iPhone apps was a no-no, and Apple didn't follow the rules laid down in 2021. Cue Epic Games and their fellow developers turning those courtroom negatives into an advantageous play. Post-ruling, Epic Games pitched Apple an intriguing exit proposal. If Apple extends these regulations globally, Fortnite can return to the App Store, bringing a gigantic player base back to Apple platforms. Drama worthy of the best soap operas, don't you think? Meanwhile, in attempting to sidestep hefty US and global tariffs, Apple's push to move production to India and Vietnam is heating up, echoed by their comment on most iPhones headed stateside coming from these regions soon. In summary, whether it's about market strategies, courtroom dramas, or shifting global chess pieces, Apple isn't just trying to sell you a shiny gadget. They're scripting an adventure full of bravado, missteps, grand financial dances, and promising green pastures, each gripping enough to churn headlines faster than you scroll through Apple News on your latest iPhone. Stay tuned, because who really knows what new curveball will come Apple's way next. Hold on to your hats, folks, because Microsoft is making some serious waves in the stock market today. If you've been anywhere near the financial world, you probably noticed Microsoft shares got off to a rocket-like launch. What's behind this bullish blast? It's the company's outstanding fiscal third quarter earnings report, which has investors clinking glasses and popping metaphorical corks. First off, Microsoft, ticker symbol MSFT, posted a blowout quarter that had our jaws dropping to the floor. We're talking about a 13% increase in sales compared to the same period last year, clocking in at a whopping $70 billion. That alone stomps past Wall Street's estimates, which pegged sales at $68.4 billion. When it comes to earnings per share, Microsoft managed to serve a cool $3.46, well above the $3.22 analysts had expected. In simpler terms, Microsoft just delivered a well-executed opera performance while everyone else was setting up for a garage band gig. The superstar of the moment here? None other than Microsoft's Azure cloud computing services. Azure flexed its muscles with an astonishing 33% year-over-year revenue surge. Yup, that's not just beating expectations, that's flipping them and making them do cartwheels. Pair that with growth in Microsoft 365, which saw an 11% rise in commercial sales and a 12% hike on the consumer side, and you've got a recipe for a sensational stock surge. Microsoft isn't just tooting its own horn by living in the moment, they're setting impressive forward guidance as well. Their eyes are set on more glory, with expected Azure revenues to grow by up to 35% in the coming quarter and a projected overall revenue increase of 14%. This strategy might just be the spoken word that keeps skeptical investors more in love with Microsoft than ever before. Let's give a shout out to CEO Satya Nadella, who, while playing it cool, assured everyone that software remains an essential tool for beating inflation and handling economic hurdles. Essentially, Microsoft can do more with less, engraving a sense of stability and reliability despite market jitters. This reassurance, paired with the robust numbers, offered a comforting balm to investors worried about potential slowdowns or economic hiccups. And hey, it's not just the third quarter fireworks catching everyone's attention. Microsoft dropped some hints during their recent earnings call that bolster confidence about handling future economic unpleasantries. While they chose not to give any straight-up guidance in the earnings release itself, There's been plenty of discussion on how they're set to tackle any slowdowns in cloud spending, a hesitant PC market, or even LinkedIn impacts due to job market fluctuations. In short, Microsoft executed a phenomenal performance, compelling upward excitement around its stock, and a bunch of analysts are probably kicking themselves for not betting the house on it. So keep your eyes peeled on MSFT if you're tech stock savvy, because if this vibe continues, it's going places and fast. All right, tech enthusiasts, we've got quite the story on our hands today involving the adtech giant AppLovin. So gather round as I break down the juiciest deets and give you all the need-to-know info. AppLovin, a big player in the mobile advertising space, has found itself in legal hot water and at the center of some pretty serious allegations. Several lawsuits have been filed against them, each accusing the company of misleading investors and using shady practices to boost its financials. Yikes. The company had proudly launched its Axon 2.0 digital ad platform, touting its ability to utilize cutting-edge AI technologies to match ads more effectively. However, reports emerged claiming that AppLovin was exploiting advertising data from meta platforms and engaging in sneaky tactics like self-clicking their own ads and sneakily forcing app downloads. It's like ad magic gone wrong. Once these revelations hit the streets, AppLovin's shares took quite a tumble. We're talking a 12% plummet back in February, and then a staggering 20% nosedive when more bad press popped up in March. With its stock value looking like a slip and slide, AppLovin is now facing class action lawsuits, with investors and law firms scrambling to jump in about as fast as swiping right on a dating app. The big date to remember here is May 5th, 2025, when the deadline to seek lead plaintiff status for these lawsuits approaches. It's like the keynote event in this saga, and those wanting to take action better circle that date. On top of all this court drama, another spotlight moment will happen on May 7th when AppLovin reports its Q1 2025 financial results. With shareholders watching like kids eagerly awaiting the next season of their favorite show, AppLovin's got a lot to prove. Will they shake off the bad juju and impress everyone with some stunning numbers? Or will fears, magnified by short sellers, get the best of them? A major plot twist awaits. And with AppLovin extending its business from mobile games to a bigger stage with e-commerce and connected TV channels, there's a blend of excitement and trepidation in the air. This combination of high stakes and high expectations could push their stock wherever the winds of fortune take it. But enough about the business shenanigans. What do you think, tech fam? Is AppLovin in for a redemption arc, or are they driving straight into a brick wall with these legal hurdles? Are you team AppLovin, or waving the red flag? Share your thoughts in the comments below, and let's get the discussion buzzing. Whether it's popcorn or a facepalm, these stories are never dull. All right, let's dive into the epic saga of Microsoft today. If I had to make a call on what I'd do with MSFT shares in light of today's news, I'd lean towards buy. Why, you ask? Well, let me break it down like a fun tech jig puzzle. First up, Microsoft's financial prowess is shining bright, reminiscent of the proverbial Northern Star. With quarter-over-quarter jaw-dropping growth, including a 13% boost in sales and substantial EPS figures rocketing above expectations, this is something you don't see every earnings season. We're talking about a beast that not just stomps but does cartwheels over Wall Street forecasts, making it a stock superhero of the moment. The star performer here is Azure, Microsoft's cloud computing service, which saw a breathtaking 33% revenue uptick. Cloud computing is the place to be, my friends. It's a hotbed for growth, and Microsoft is boldly claiming its territory. Couple that with the strengthening Microsoft 365 ecosystem, and you've got a firm standing as a linchpin in both consumer and commercial sectors, essentially making it a tech stock tour de force. Add to this zest a reason for investor faith with their glowing forward guidance. With impressive targets for Azure's growth and overall revenue projections, Microsoft is crafting a narrative not of stagnation, but of unabated expansion and resilience in the face of economic concerns. CEO Satya Nadella's commitment to using software as a hedge against inflation is like sprinkling a layer of confidence on top of an already delicious financial cake. Given these powerful indicators, the robust earnings performance, the strategic directions, and the magic of cloud computing, it's hardly a leap of faith to see Microsoft as a sound investment pick. Yet remember, as dynamic as these insights seem, every investment decision should meld with your unique financial jigsaw. So dear listeners, always do your own research and consider your risk tolerances before throwing your hat in the stock market ring. Stay savvy and happy investing. Today's tech market wrap is quite the roller coaster, folks. We witnessed Apple's thrilling courtroom drama and geographical production shifts, Microsoft's cloud-centric victory parade boosting its stock sky high, and AppLovin trying to navigate the murky waters of legal troubles and investor skepticism. Whether it's winning quarters or navigating legal quicksand, these tech giants certainly know how to keep us on the edge of our seats. If you love today's tech insights, don't forget to smash that like button, subscribe, and share this video with your fellow tech enthusiasts. And make sure to tune in tomorrow for another whirlwind tour of all things tech.